Hello, this is Merrill with Tax Tutor. Today I wanted to talk about a topic that comes up very frequently in the accounting and the CPA world, and that is the difference between a reactive CPA and a proactive CPA. Now, unfortunately, most CPAs out there are reactive. So what is reactive? What is the definition of reactive? The definition of reactive is someone who responds to an event and does nothing to try to create or control that event before it happens. So in this case, like a reactive CPA is someone who, after the year is over, will now come and file tax returns based on what has happened in the prior year. They have taken no action to try to create or control the outcome of that return. They're purely just reporting what has happened in the past. Same thing applies to bookkeeping and business advisory. A bookkeeper will do really nothing to try to create or control the outcome of the bookkeeping of the results of the company. They're just going to report what's happened after the close of a month, or even worse yet, after the close of a year. In the opposite of that, a proactive CPA will take action. They will do something to create or control the outcome that they're looking for. Like for us in our CPA firm, we are doing tax planning for clients. And so when we prepare somebody's tax return, we already know what that tax return is going to look like because during the year before, we've met multiple times, we've done projections, we've done forecasting, and we've taken steps to reduce that tax liability. So usually we run a projection, we say, okay, based on as everything is going now, this is what you're looking at. If we take actions A, B, or C, or a combination of A, B, and C, this is what the result's gonna look like. We then work with our clients to create that result, and we control what's going on so that that result can be created. So by the time we get to preparing the tax return, we already know what that tax return is going to look like because we've done everything in advance proactively to create and control that outcome. Now, there's a number of benefits of hiring a proactive CPA. We've talked a little bit about the tax benefits. You can certainly do some strategic tax planning. Basically, you kind of look at your situation, you say, it looks like you're going to owe a lot of tax. Here's a few steps that you can take before the end of the year to reduce your tax down. And that tax savings can be significant. You can look at $10,000, $20,000, $50,000. In one example, we were able to save a client $1 million in tax in 1 year. And so, and then the larger the income, the more opportunities there are to save money on tax. Also, a proactive CPA is going to be helping with cash flow management, helping to make sure that your business has enough cash to continue operating and is not going to run out of cash and thereby put you out of business. A proactive CPA is also going to be looking at business growth strategies. They're not just going to be a bookkeeper that's going to come at the end of the month and say, okay, this is what happened during the month. We'll see you next month and see how that month goes. Instead, they're going to be saying, okay, here's our results from last month. What can we do better this month to get a better result? And then they'll start putting things in place. They'll start finding ways to grow the business. They'll start finding ways to reduce costs. And so that when you do the bookkeeping the following month, you always got to do bookkeeping. That's one side of this. You always have to do things in the past, right? You have to file tax returns or else you go to jail. So that's still part of it. You also have to do bookkeeping so that you can get the taxes done and also so that you can know where your business is at and where it's heading. So that bookkeeping is still an important part of it, but there's the proactive side of that where you're creating and controlling what's going on. If you want to grow your business to, say, $1 million in sales, a proactive CPA will come in and say, okay, here's where we are now, here's where we want to get to, here's a plan to get to that spot, and they'll meet with you regularly and go through that, and month by month you'll see your business growing and start seeing results coming from that. Now, a couple of examples. I talked a little bit about the client that we saved $1 million for. Another client that came to us, they'd worked with a CPA for years and years and years. This client was kind of getting toward the end of their career. They'd worked with a CPA for 20 plus years, and that CPA just had them in the wrong entity type. And that entity type ended up costing this client $25,000 a year extra in taxes that they didn't need to pay. So $25,000 a year over a 20-year period is $500,000 in taxes that this client had overpaid. Now, that's not the worst part of it. The worst part of it is that they could have taken that $25,000 a year and invested it somewhere and grown that money more than $500,000. If you think about time value of money and return on investment and things like that, it was easily well over $1 million that this client had lost simply because they were in the wrong entity type. So a proactive CPA is going to look at your entity and say, okay, let's switch around entities. They're going to look at your tax deductions that you're taking. They're going to look at tax strategies. They're going to be on top of that and giving you guidance and planning that way. Same thing with business growth. Another example is business owners that are in what we call the in-between zone. So we've worked with business owners in that zone where they're not quite up in a startup. They're making over $1 million in the business. Their gross receipts are over $1 million. So gross receipts would be before you get into expenses and all that. So gross receipts are hitting $1 million. They're starting to hire staff. They're starting to grow a team. But they're also just still super busy and working really hard in the business and working harder than ever. They don't quite have the right team in place. They're not sure how to put that right team in place. They're not sure of the next steps that they need to take to grow and develop that business. And they're starting to just work more and more and more and honestly just get a little bit burned out. And so that's where we are able to come in and say, okay, here's where you are. Here's where you want to get to. Here's a plan to get there, and actually be proactive and create and control that outcome before it comes. Now, it's important to note that if you're interested in working with a proactive CPA, if what I've said is interesting and sounds great to you, you have to understand that working with a proactive CPA, we don't consider it to be a cost. When you work with a reactive CPA, it's purely a cost. When they're preparing a tax return and it costs you X amount, or they're doing your bookkeeping and it costs you Y amount, that is purely a cost because they are doing nothing to actually help you. So it's a pure cost to the business. When you work with a proactive CPA, it's considered an investment. It's going to be a higher dollar amount than what you're paying a reactive CPA. However, you should expect to see some kind of a return on that investment. Meaning, if you pay X to a proactive CPA, that proactive CPA should be showing you how you're getting 2, 3, or 4 times your money back by working with them. So that's why we call it an actual investment. So, and I know that can be a little nerve-wracking because when you go into it, you often want to compare and say, well, right now I'm paying X for my current CPA. This proactive CPA wants to charge me X plus, and is it really going to be worth it? Is it really going to help me? Yes, it should. And if it's not, then you're actually not working with a proactive CPA. You're working with just somebody that's charging you more and doing the same stuff. So a proactive CPA should be able to show you, hey, if you invest this much, we're going to get you back 2, 3, 4, 5, whatever the multiple times that is. And you can see that coming in tax savings. Sometimes you see that right away. Sometimes when we start working with a client, within our first meeting or two, it's like, okay, well here, your investment with us was X, and here's some tax saving strategies that we can implement right now that will save you 2, 3, 4, or 5X. We started working with a client here recently where we started looking at their stuff. We charged them a certain amount for that proactive services, and immediately they got back a 5 times investment for that. And that was because we were able to go back and amend some returns, immediately get them back 5 times what they invested with us as being proactive. And going forward, they're going to get that savings. So it's a huge multiple that they ended up getting. Same thing with business growth and those business services. You should see your bottom line growing exponentially based on the help that you're getting from a proactive CPA. It's important to note how often you meet with your CPA as well. The more you meet with them, the better the results you're going to get. Now, the more you meet with them, the higher the investment's going to be because now you're taking more of their time, but the more and the better result that you're going to get out of that. And I'd say talk with your CPA. Maybe your CPA is proactive, but you're just not on a proactive plan with them. So I'd talk with them and say, hey, I'd like to be more proactive. What do you offer for being more proactive? If they don't have anything, then you might have the wrong CPA. If they do have a proactive plan, that's great. You talk to them about how that works, what the investment looks like, what you can expect as a return on that investment from working with them. Those are all important things. Now, I mentioned how often you meet with your CPA will be determinant on the results that you get back, kind of your return on investment there. This is something that I learned from someone named John Whiting. He has kind of what I call the triangle of communication. So at the top of that triangle, kind of the top corner of that triangle, is communication, and then on one of the bottom corners is reality, and then the other bottom corner is affinity, or how well you like someone. Now, when you stop talking with someone, when you fall out of communication with someone, you are no longer aligned with their reality. There are things going on in their life that you no longer know that is going on. You're out of sync with their reality. And when you're out of sync with someone's reality, the way that you feel about them, your affinity or your liking for them kind of goes down as well as just a natural result because you're just not in communication with them. The opposite holds true. The more you communicate with someone, the more they realize your reality, the more that they know what's going on in your life and know what you're doing, and the more that they tend to like you because they can recognize and understand what's going on in your life. A good example of this is, us working with clients. Sometimes we'll send out invoices to clients, and sometimes clients that have been quick to pay those. They're not paying them, and we haven't communicated with that client maybe, or something's has fallen off in our communication with them, and so we send out an invoice and it doesn't get paid, and then we think, oh, that client must not like us, or that client, we start to harbor kind of bad feelings because we're not getting paid by that client. Well, if we just pick up the phone and say, oh, hey, John, I recognize you weren't paying our invoice, just wanted to see what was going on, and then John will say, oh, sorry about that. I didn't see your emails, or sorry about that, I've had this going on in my life, or sorry about that, this family member is going through a medical issue that I've had to focus on. There's something else going on in that life. It's not like we just assume that because they're not paying an invoice or something that it's some bad thing about us. But in reality, maybe they didn't see the email or they've just got something else going on in their life. So increase your communication with people to better understand them and to better come in harmony with what's going on in their life, and that builds how well you like them. Same thing applies to the CPAs and working with professionals and advisors. The more you're in communication with them, the more they're understanding what's going on in your life. The more they understand what's going on in your life, the more strategies and recommendations they can come up with. If your business is going through a bit of a slump, a bit of a hard time, that CPA can look at it and say, hey, have you thought about X, Y, or Z? Have you thought about doing this? Have you thought about growing this way or doing this sort of thing or raising prices here? Something along those lines. And so, so the more that you communicate with them, the better result. Again, the more the investment's going to be. However, the more of the return you should see coming back on that investment. Okay, so how do you find and hire a proactive CPA? Well, there's really kind of like a three-step process. You do some research. Look online. Go and look at their, if they have a physical office, they probably have like a Google Maps, and they might have some reviews on the Google Maps. Go and check those out. Look at their website, Google their name and see if anything comes up, see if you can find anything that way. Maybe, reach out to your other advisors and get referrals from them. Maybe you work closely with an attorney. That attorney probably has some really good CPA contacts. Or maybe you work closely with a financial advisor. That financial advisor probably has some really good CPA contacts. Tell them, hey, I'm looking for a proactive CPA. Who do you know that fits that category? And they can give you some suggestions. You can then research them online and learn more about them. Then it's important that you interview them. As you interview them, talk to them about their process. Say, I'm looking for a proactive CPA. What is your process of proactivity. How often do you meet with clients? What are your kind of packages? Most CPAs that are proactive will have different packages. Like I know in our CPA firm, we typically have 3 packages. We have an annual package where we meet with you once a year, go through the accounts, do some tax planning, and get you some results there. Then we have a quarterly package where we meet with you quarterly and go through everything. And then there's a monthly one as well. Again, the more that you meet with us, the better the result. Those that meet with us monthly, we're really dialed into their businesses, really dialed into their lives. When things come up on the tax saving side, they're the first that we think about because we know that we have a meeting coming up with them and we've got to have something to talk with them about in that meeting. Those that we work with quarterly get better results than those that we work with annually. So find out from that CPA as you interview them what kind of packages and how proactive that they are. And finally, what's really important is working with a proactive CPA is to find a good fit. I've noticed that just over the course of my career. I get on calls, I talk to people, and it's just like, what we are doing the proactive services that are looking for, but maybe personality-wise or just some reason, it just doesn't feel like a great fit to work together. Sometimes we get on calls and we talk to people and it's like, we're good friends, we hit it off, and we're excited to work together and kind of move on. So, that's something else to keep in mind. Every CPA has a different personality, a different way of working, different way of communicating. Maybe you are like to just text and the CPA is more of like, I mainly just email, maybe it's vice versa, however that is. Just kind of find somebody that works well with you and fits in to the way that you like to work with someone. Those are our topics there on hiring a proactive CPA. Hiring somebody, again, should be a return to you. That's the important part of knowing that. It shouldn't be a cost. It should come back as a return to you. And if you are looking for a proactive CPA, we would love to look at that and address that. That would be done in my CPA firm, Taylor Proactive Team. You can go online and look at the tptcpa.com is our CPA firm there. If you're just looking for more tax education, you can go to our website, taxtutor.com. We have a weekly newsletter that you can sign up for there that we send all sorts of tax and business building tips. And then we also have an online community on school that's also you can sign up for at taxtutor.com. That's a community where we foster communication with business owners. Business owners can connect with each other, learn from each other. We do some trainings in that group as well. We answer questions. So if you have questions about anything in this video that we talked about, you can comment in below, or you can always come in our school community and we're happy to answer questions there. So thank you.